So I hear a lot about 321 buy down. Can you tell me like what the benefits are, why people would want to use it?
You know what? That's a great question. And we're seeing it more and more with interest rates staying a little bit higher, that people are reluctant to go out and maybe purchase a new home. And it's less to do with the interest rate. Everybody knows that rates aren't great. What it is, it's the payment. They just want to know that they can make their payment. Today's people are way more focused on what's going in and out of their checking account than what their rate is. So here's what it is, why it's pretty cool, and why it works for a lot of people today. If you've got a buyer that's maybe reluctant to move forward, what happens is they are upfront prepaying interest on a 321 buy down. They're prepaying some interest in year one, a little bit less interest in year two, year three. What it does is it gives them an artificially lower payment over that first year. I can actually share a little example here. Let me share a screen. This could be kind of cool. And we've got a calculator. So right here is an example of the calculator. You've got a 321 buy down. We'll just look at an example here. $450,000 house. Let's say they're getting a 6.5% interest rate on a 30-year mortgage. If you were to go through, and a lot of sellers today, depending on your market, are offering concessions. They've got houses that have been sitting for a little while longer. It's maybe a little bit more of a buyer's market. In this scenario right now, you can prepay upfront $20,000. You get a seller concession on this 450,000, or I guess it would be, $500,000 house, whatever it is. The buyer of that house is going to receive a monthly payment in year one, not of 6.5%, but actually 3.5%. So it becomes super attractive for them today because, like I said, people are concerned about their payments. So a much lower payment in year one, year two, year three, then out in year four, they're going to revert back to the 6.5%. Now, depending on what happens, there's a good likelihood that they will refinance at some point here over the next couple of years and be able to take advantage of better interest rates. And here's the beautiful thing about doing a buy down. Let's say 6 months down the road, they refinance, they receive back any portion of that initial upfront that they didn't use. So it's prepaid. It's set aside in an escrow account. It's not like buying points that once you buy the points, if you refinance or do something, sell the house, you're out that money. This is set aside in an escrow to offset that payment, and you get the seller to pay it up front. So it's great for somebody that maybe that's just getting started out, that believes in a couple of years they'll be making more money. Maybe somebody that's trying to buy a new house before they sell their other one. Somebody that's maybe just a little bit cash strapped today with everything being more expensive. They know they'll be in a better spot tomorrow, but maybe they don't want to take on that payment. So this is not right for every single client. However, it is right for a lot of them. And if you're not having the discussion or somebody's telling you that rates are too high, I believe you owe it to them and to yourself to present this option. And what I see happen time and time again, people don't present the option. The loan officer loses the deal. The agent loses the deal. They end up still buying a house. It's just with an agent and loan officer that understand how this program works. So if you want, we'll include a link here for the calculator. You can go in and put in numbers of a particular client on your own. You can see what you'd need to ask for in a seller's concession. And that might be a way to go ahead and make a few more buyers a little bit more ready to make an offer today. That is a 3-2-1 buy down, or a 2-1 buy down, or a 1-1 buy down, or a 1-0 buy down. A lot of different options, a lot of different ways to go. And you can see that the price changes and how much they save. But definitely something worth knowing about.